All right, welcome to day 3 of trading my 50K Top Step funded trading accounts. For today, we are looking slightly higher than what we see here, but the way Top Step does its graphs is at the end of every single day. Our P&L for yesterday end of day was $440 per account, so just over $2,000. For $1,800. And for today, which is the third day, we've pulled in roughly $270 per account, which is $1,200 or roughly $1,300 across my 5 accounts. So in total, we're sitting at $3,500, which is, I think, pretty decent for 3 days of trading. We are definitely going to want to scale this up as our maximum loss starts increasing after the $2,000 mark, but you'll see me creep up slowly and surely, and I'll start sizing up my positions once I get a bit more of a buffer on the downside. But for today, my agenda with you is going to be reviewing yesterday's trades and today's trades. And also, in the meantime, I'm going to be talking about some key PD arrays that I think you should be looking at. I'd want you to backtest them and forward test them moving forward if you are watching my channel, as I think they're going to greatly increase your strike rate and your trading ability within the futures market. All right, so without further ado, let's jump into the charts. And I am going to scroll all the way to yesterday's trading day. Okay. So yesterday, I took 3 trades. All of them were great trades. 2 of them weren't managed correctly by me, and I was a bit punished. I think yesterday would have been a great day. I think I would have pulled over 5K, but unfortunately, it was just $1,000 across all my accounts. So let's start out with the first one. The rationale behind the first trade is this blue line here, this blue line that you see here, and you'll see it every single day, is the 7 a.m. pre-market open. This is usually when the algorithm pre-New York starts to deliver. And you can see here, really, one key thing here is I have this line right here on the low of 614. And what it's showcasing is relative equal lows that have been formed between 6 to 7. And my thought process going into 7 is most likely these bottoms are going to be taken in the near future. So when price opened up at 7 a.m., it traded to this pinkish bar. And what this is, it's something called a new day opening gap. So every single day, there is a gap in price from 414. So you can see here from, oh, sorry, my mistake here. Trading hours close at 414, but from 4:59 to 6 o'clock, there's always a daily gap here. And you can see here, it gapped to the upside and it created this new day opening gap, which I'm going to be calling NDOGs moving forward. So what price? And you can see how well it gets respected, this NDOG, right? So they're fairly strong PDA arrays, and they're really good to feather them into your overall bias and how to trade to them and against them. They either act as magnets or price trades to them and then repels away from them, targeting the next level of either inefficiency or liquidity. So in this case, what did price do? At 7 a.m. it opened up, it traded to the midpoint of this NDOG, directly to the pip, to the point. And it broke down really fast. What it did is it created a SIBI, sell sign imbalance, buy side inefficiency, which is a type of fair value gap. And right when it did this, and I saw price essentially slowly moving closer, trying to break it, but not really, that's when I entered short with my stop above this fair value gap within the NDOG, and my target was these relative equal lows. And again, without any surprise, it did tag, or it almost tagged these relative equal lows. It did tag my low, which I was very happy with. I think it was sheer luck. If I had my stop one point lower, I still would have been in this trade and it would have broke me out for break even. But I did manage to pull a 2-to-1 on this. So 2 RR over 1 RR, which was roughly $400. And again, this was, in my opinion, a very strong, let's say it's an A+ setup. What price could have done, which would have made it a better entry, is if price popped back into the lower half of this fair value gap, rejected it, and then went lower. In my opinion, that would have been my preferred entry, but I had a feeling that there was a 50-50 shot that price would not go back in here. And I took the trade as a 2-to-1 versus, let's say, a 3.5-to-1. Okay, so very simple, rejecting the NDOG, targeting relative equal lows. Okay, and this has happened at 7:08 on the 3rd of December, which is the Tuesday. Okay. My second trade of the day was, I've noticed that price failed to create, what it did is it created equal bottoms again, right? Relative equal lows. And in my mind, I'm thinking price is going to tag this in the near future. Let me try to create some kind of story, some bias of why it's going to get there. So at 8:30 every single day, there's an algorithm that kicks in. And sometimes it kicks in and sometimes it doesn't. And sometimes price will spool and it's just going to shoot a single direction at 8:30, or it's going to do nothing. If it does nothing, wait till 9:30, trade the 9:30. But if it's spooling, then that might be a good opportunity to try to get into that price action and ride that train to wherever it's going. But in this case, 8:30 kicked in. My bias was short. I kind of waited for what price is going to do. And you can see here, I pushed all the way to the upside. I took out all of these highs here from 4, 5, 6. I didn't take out this high here from 350, but it took out a lot of liquidity. And then it aggressively dropped down lower. It came back up. It rejected the NDOG, a SIBI, which is a fair value gap. And it closed lower. And then from there, it pushed relatively a lot lower below my target. The trade that I took was, and again, I missed the initial entry, which should have been right here. I took it like this. I think my entry was subpar. My thesis was really good. And what price did is it dropped lower once I got into, hold on. There you go. Perfect. That's where I entered. My stop was above the candle's high of the fair value gap. Price went lower. It popped back above into this fair value gap. What it did is it tagged me exactly at my stop loss. And then it dropped down to my target. So this has created, for yesterday, a lot of negative emotion in me. I was tilted after this, as when this happens, highly unfavorable for the trader, just because it really throws off your psyche. And I was pretty PO'd up until the open. Made 2 here. I lost 1 R here. I doubled up on my risk because I was fairly confident in this trade, but unfortunately, I did take a loss here. And then my final trade of the day, which netted the $200, the upside, was this one right here. On the open at 9:30, this is where the futures market opens up. Price took out all previous lows, and the most recent low was at 9:15. Here was the Judah swing, which is the fake swing before the real move. It popped up higher, and it created this fair value gap. And what I call this fair value gap, and what you'll be seeing me referring to this moving forward, is the first fair value gap. What this is, if you don't already know, and if you haven't watched the 2024 mentorship of ICT, it's the first fair value gap that forms after 9:30 that is not on the 9:30 candle. So if FVG forms on this candle right here, it wouldn't count. It would have to be 9:30 and onwards. So this is the first one that forms, and this is a very strong PD array that I want you to try to incorporate into your trading. It's very strong. I think it helps more often than not. And it's one of the strongest fair value gaps that you'll be using after the 9:30 open. So here, what did price do? It came up higher, created that first fair value gap. It came lower. Right when it tagged that, my bias was that because of the higher time frame bias, and this is kind of where we're at right here. This is where I took the trade. that did not copy correctly. Let me. I think I have the wrong ticker here. It's the same price action, but it allows you to copy and paste a bit easier. All right, that's better. So my trade was taken right here. What price did is it dropped all the way down. It tagged a BISI, buy side inefficiency, sell side imbalance, and it pushed higher. Right when it did that, that gave me the confidence saying, hold on, price already did the damage on the downside. It tagged that inefficiency. Most likely it's going to be doing what? It's going to be targeting all-time highs, all of these equal highs that you see here on the 1 hour. This is all juice here for the market to take. And what I've done is I've taken that long off of that first fair value gap. And the target was right here, all-time highs. And into the gap, I thought that was as adequate protection. But what price did is this wick right here, again, took me out because that's where my stop was. And what price did is after that, it went into the intended direction. So this was a pretty big position. This little swing right here was 200 USD. And unfortunately, this would have been a big position if I did manage my stop loss correctly. So this goes to show that if you don't manage your stop loss correctly, if you trail it too tight, you will get stopped out. Unfortunately, I did from my end. And that's when I decided to stop trading for yesterday's day. I took my $200 per account, so $1,000, and I called it quits. So all in all, it's a good trade if you manage your stop loss correctly. Feel free to analyze this and how the first fair value gap gets respected, both on the 15-second time frame and on the 1 minute here. Okay. All right. And let's move into today's trades. So today's still going on. Right now it's just before noon. And I have taken 2 trades. The first trade was a loser. It was at 825. Won't be going into much detail here, but the consensus was that relative equal highs were taken here on the 1 minute. And I wanted price just to pop back down and just to take that low before going higher. I was wrong on this. Price did start moving into my direction, but then it went the other way. I did trail my stop loss to the most recent high, which is right here. But unfortunately, that was my first loss of the day. And then my second trade of the day was this one right here. Let me find it on the 15-second time frame. You know what? On the 50 seconds, it's not that important. I can get the information across on this, but on the 1 minute time frame, price essentially tried to push down into this green block right here, which is the opening gap. It's where price closed at yesterday at 414 and it opened up at 930. Usually there's a 70% chance that price will get to the midpoint, but if it doesn't, like in this case where it can't even break that first quadrant, it means that most likely price is going to be bullish. So I was watching price after 930. It created that first fair value gap right here. And that's my line in the sand there. I'm watching how is price going to react to this. So price dipped once. It dipped a second time. And then once it dipped that second time, it went back up. And on the 15-second chart, I do need to find the 15-second chart here. That's between price action. Trade, here. What it did is it broke above it, right? It came back down, touched it, explored to the upside, and that was my consensus there that price did the damage. It used this fair value gap as an inversion, popped higher, and I just went into the trade there, had my stop below that first fair value gap, and for me, the consensus won. Feel free to tag me up at -1 RR or take me all the way to 6.5, attacking the all-time highs. And what price did is, and what price did here for, okay, let's do a reset. So for my second trade, it was after the 930 open. What price did was it dug into the first quadrant of this green block right here. It's on all my time frames, which is the difference between yesterday's closing price at 414 and today's opening price at 930. And there is a stat that 70% of the time within the first 30 minutes after 930, it will hit the midpoint, which is right here. But in this case, I was watching it, but price had a really tough time breaking this first quadrant of this opening gap. And what that usually indicates is bearish pressure. Higher time frames, they're screaming bullish. So what this means is if price fails to break the first quadrant and it keeps getting rejected off of it, it might indicate that there's bullish pressure presence. And when I saw price for a second time dip into this first quadrant of this opening gap and pop higher and breaking the first fair value gap, creating a 1 minute fair value gap, that was my indication when price kind of went back down here is going long and taking this price up to the all-time highs, which was my ultimate drawn liquidity, as price was very bullish and really there shouldn't be a reason for it to go back down. So this was a good trade. It was a 6.5 to 1, but because my first trade I did leverage heavy, I did end up with $200 to the upside, or almost 300 for the 4th of December, which was my third trading day, trading these 50K top step accounts. So some recommendations. As of right now, 12 o'clock, Powell speaking in 2 hours. Never trade after 10:30 or 11 on these days because price starts doing really nothing. Like, look what it's doing right now. It's delivering very efficiently. Not a lot of fair value gaps are being formed. It's just moving in one direction. It's painting over itself very effectively. Back and forth, back and forth. These are very hard trading conditions, in my opinion, to trade in. And to be honest, I think the trading week's done. Tomorrow is NFP Thursday, so it's a day before NFP. Price action isn't clean. It's a bit sloppy. And you will get wicked out. Like, it is harder to trade. Don't recommend trading if you want to preserve your capital. And Friday is NFP day. So again, price is, it doesn't paint between the lines as well as it does on any other days within the trading month. So highly recommend, if you're up for the week, take Thursday and Friday off. If you're down for the week, don't give back more to the market. Take it off, refresh, go get some cardio, some workouts done, hit the gym, and come back on Monday with a fresh mind, a clear mindset, as we're going to get probably some really nice clean moves the next week. So I guess if you've gotten this far in my video, feel free to leave some feedback in the comments. Let me know what you want to see from me. If you want to see trade cap reviews like this, the benefit of this is it allows me to focus on key messaging, and it allows me to essentially give you homework on review this within your own charts, focus on key price action moving forward based on what I said today. I can also provide what I did yesterday or 2 days ago, which is my live thoughts and charts trading. I can do that as well. It's a bit more choppy, my thoughts, because I'm more focused on the trade and making sure that spans out well, but I can definitely do that. Or if there's any other content that you guys want me to cover, like specific PD arrays and how they work, or how to catch it, or how to catch market structure shifts, or how to look for, or how to read charts from the daily all the way to the 1 minute and create a higher time frame bias, let me know. I'm interested in your thoughts, as I want to tailor these to you and to your learning. So without further ado, or let me say this, without anything else to say, I'll see you guys next week on Monday. And I guess closing thought here, if I hit 1,000 subscribers, I would be very open to doing live streams every single day on NQ. But again, let me know if you guys want that, or if you guys want to trade on your own. I guess till then, be safe.